Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 21st, 2022, and we have massive volatility in the markets. We're going to get into why this could be it. This could very well be the first move of the massive run up that we've been expecting in the market. We're going to have a look at the DXY. We're going to have a look at Bitcoin, obviously, and some altcoins, the altcoins in our watch list. We're going to see what's going on in the markets. If that sounds interesting to you, then stay tuned. Guys, I hope you're having a great Wednesday wherever you are. All right, let's get into it. So let's start off with Bitcoin. All right, Bitcoin is looking good, okay? There's nothing really alarming about what's happened. As you can see, we've been steady in this channel for about almost 100 days, okay? Going up and down, up and down. We're right now at the bottom of the channel. This is why it's decision time. This is why we said in yesterday's video that it was now or never. Why? Because either we break up or we break down severely. Okay, one of you all said in a comment that I read first thing in the morning, hey, maybe we go down to 16 and find support. Perhaps, okay? There's always a possibility that you wick down below a range without completely breaking it and then go back up. There's always a possibility. But we don't want to play in this region to the downside, because a break of this channel is a complete break, which would most likely yield a $12,000 Bitcoin, okay? Because you may very likely go down the height of this channel, just, doing your pattern analysis. Obviously, I don't think many people want us to go down. Maybe some people do. I don't think that person necessarily wanted us to go down. But I don't think that's very likely, okay? And hear me out. I know I've been saying the DXY is topped. We're going to reverse any second. We're going to get into that, don't worry. I'm going to share, what I got wrong, what is still on the table, all that stuff. So don't worry about that. But just looking at Bitcoin on the smaller time frames, so the hourly time frame, this is big volatility, but it's very encouraging that we've held this level right here. So if you take your Fibonacci retracement tool from, let's see, is it? Yeah, right here. Okay, so if you take your Fibonacci retracement tool from the bottom to the top of this move right here and consider this an initial break of structure to the upside, right? Whatever you've done here, you've maintained your 0.618. That is very, very positive for continuation to the upside. This move was super volatile. Okay, what do we know about volatile moves? Every single pattern in existence, it doesn't matter what it is, whether it's impulsive, whether it's corrective, always ends in an impulse. Okay, I hope that's not confusing. Let me rephrase that. Every single move, every single trend, let's say every single trend in existence ends in an impulse. Okay, if that trend is consolidative, if that trend is, everything actually is the precursor to any move, whether impulsive or corrective, new corrective move is a consolidation by definition, because the consolidation gathers orders for the change in direction. So a change in trend is always preceded by a consolidation, and that consolidation is always concluded by an impulsive move, okay? That's the best way to say it. So it could be an ABC flat correction. That C wave is going to be impulsive. It could be a WXY complex correction. That Y wave is going to be impulsive. It could be a WXYXZ, a 333 complex correction. That Z wave is always impulsive. Do you see? So when we see impulse, after some consolidation, that tells you whatever consolidation we were doing, that is over. Okay, it could obviously yield a new round of consolidation. Sometimes that happens, but a large impulsive move, okay, now you have to look at degrees. A large impulsive moves usually signals the end of a large consolidative move, okay? And so if you want to take, let's zoom back out. And guys, please like the stream if you're getting value. If you want to take this entire trend right here, okay? And this one, once again, is our 100-day consolidation that we've been in. It's like 94, 95 days. I'm just rounding it out to 100 days, okay? Since mid-June, you can see you go up and down, chop, 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 chop. But at the end of the day, you went up impulsively and down impulsively. And then you focus on the smaller kind of iteration of that, a recursion of this consolidation. And so that's just to put it in context, right? You go up, you go down, you go up impulsively, you go down impulsively. Actually, you don't go down impulsively, you go down correctively. And that is the end of this flat correction. That's what this is right here. So it's your move, Bitcoin, right? We think on this channel that the next big move is up, okay? For many reasons. So this would be the conclusion of this consolidative range and this larger consolidative range based off of our analysis of not only Bitcoin, but also the DXY, which we're going to get into in a second. And again, it's really, really, really promising for continuation to the upside, which this initial break of structure was a move to the upside, that this represent a correction that respected the 0618 golden pocket right here, right? The fact that you're respecting the 0618 golden pocket is very, very promising for continuation of that initial move. Do you see what I mean? Because it's a move, counter move, then you get continuation. The continuation's more likely than not once you're getting that respecting of the 0618. Obviously, you can have moves where you're going up in 5 or in 3 and you retrace even more than 100% and still get a move up. Okay, you can see that as well. But that's harder to read, okay? You can have many different versions of corrections and continuations, but this particular version, I think, based off of what I just said, is likely to continue to the upside, okay? So that's Bitcoin. Volatility is good. Volatility is what? I know a lot of analysts, YouTubers will use volatility synonymously with volatility to the downside or impulsiveness to the downside. Volatility basically means a fast, quick, impulsive move in one direction and a quick move in another direction, right? That's just the English word. And again, you like to see that at the end of a move. And fundamentally, what's that doing? It's basically gaining liquidity. So, you know, the market's not mean. The market doesn't have people take it personally, but it's basically a liquidity hunt. Okay, you're coming, you're taking out shorts, you're taking out longs that, you know, had stops that are too close to the trading range, and then you continue. That's all you're doing. Yeah. So that's Bitcoin, and we can see that throughout the market, and we're going to just have a quick look. I know usually we start with the DXY, but we're going to do it a little differently today. That's all right. Of course it's all right. Of course it's all right. But you can see that here in Cardano as well. I'm not going to go through the entire chart, but it's essentially the same thing. You have a large range in Cardano and most altcoins. Instead of 100 days of trading, you have like 140 days of trading. So you have quite price history, and you have this corrective move to the upside, followed by, actually, sorry, the corrective move to the upside is in 3, followed by a corrective move to the downside in 3. But again, instead of holding the 0.618 in Cardano, you basically held the 1.618, which is also a phi ratio. But if you take your Fibonacci retracement level, obviously anywhere between this point and this point, you know, the 0.618, you're good, okay? And so this is also how I set my stops. Like if I'm in a long for Cardano, which I am, like I'll make sure I'm not in the trading range. This is fair game for trading range. It could come all the way down here, stop out some longs, grab some liquidity, and go up. But it seems to have stopped around here. Okay, we got a big green wick, a hammer candle, which is very bullish. I would not be surprised if this move continued to the upside. Yeah. So we're gonna just look at this, a few kind of examples of this, right? And then we're gonna move on. All right. So in Dodo, you do see a little bit, not as much volatility here. You saw kind of, you know, this blue range is essentially the trading range that you've been holding for 140 days, okay? If you're not exactly sure what that blue range means. And then on the smaller time frames, you know, this 4-hourly time frame, you can essentially see that volatility, but it had already occurred in Dodo, okay? So you went and did, let's see, what would that look like? You put in, it looks like you put in a, I gotta zoom out a little bit. I can't really see what's going on here. Let's see. Okay, that's, okay. Okay, I see. Yeah, in Dodo, it's simply, you put in your A wave, and your B wave was like this. So you already put that volatile move to the downside in. Yeah, it was this right here. And then you put in a pivot. If this, either this is a pivot or an impulse, I think it's a pivot. Let's see. It's a pivot. Why do I know it's a pivot? Because it hit the 786, the minimum retracement for a flat correction. Okay, it's not impulsive, it's corrective. So yeah, that's Dodo. But yeah, you don't see as much volatility as you saw in Bitcoin and in Cardano today. You have a little bit in Polkadot. In Ethereum, you have a little bit. You came down all the way to 1300, but you see that volatility. It's the same thing, right? You put in that initial break of structure. You put in a 3-wave move. Expect a continuation, okay? Because all of these moves, every corrective move, you know, and Elliott wave teaches us this, comes in 3 waves, right? In iterations or in sequences of 3. You have 1, 2, and then 3, okay? Obviously, in between these 2 corrective moves, you have some slight consolidation reversal, but essentially, it's a 3-wave move. It's a 3 sequence move, okay? Here you go, reserve rights, you see that volatility. You come down, you go up, okay? Here we go. Actually, in reserve rights, it seems like you were putting a leading diagonal in, okay? That's what it looks like there. Synthetics, not as much volatility today, okay? Veracity, not as much volatility today. Zilica, whoops. Actually, I don't know what that is. I don't need it. Zilica, not as much volatility today, but you do see what I've been saying, like your next move, you're basically basing here. You're basing here, and your next move is likely up, which you can see got nice strong green candles here. Okay, and ooh, Kadena, look at this huge move, huge move. Okay, big strong. It's red right now, but it's expected to be green momentarily. This is a hammer candle, right? You grab liquidity below this, 100 and what, 30-day trading range. As you can see, let's zoom out for a second. So you're in this range, and you've been in this range for all of this time, guys. 130 days, you haven't broken it. You wick below. 132 days, you wick below, but you're basing. Okay, it doesn't look like you're breaking. You're basing for a big move up. Okay, Binance Coin is holding the 618 like a champ. You can see that. I already pulled the Fibonacci retracement level. Litecoin, you're holding that range. Okay, you've been holding this range for, again, many days. Okay, so this is something that you've been in for 132 days, something like that. And you're pretty much preparing for that next move up. Harmony 1. I mean, this is the bottom of the market. This is at the absolute bottom of the market in terms of timing. Yeah, obviously you had periods in time where you were lower in price, right here, but this could be considered the bottom of the market because the next move is the impulsive move up and out of all of this. XRP's been running. Okay, XRP's already started, as we said, and you're testing actually the top of this range that you've been in since May. Okay, so in this range of 132 days, now with XRP, you're testing the top for a massive breakout to the upside. Okay, so let's see. And Dogecoin, which is the last one on our watch list, you have, as we've seen before, a falling wedge, and those falling wedges break violently to the upside, and that's what you're in right now, and you're testing the tops of that. Nothing bearish about this, okay? There's nothing bearish about this. Bitcoin and altcoins look to be poised for a run up right now, okay? So that's great news. Okay, now let's get into the maybe not so great news, but it's still okay, and I'm going to tell you why it's okay. Guys, if you're getting value, please like, share, and subscribe. This has been a tough period for trading and for, speculating, right? I've been waking up in the middle of the night, checking my positions, playing defense, adding to my margin, just trying not to get stopped out, right? This is where all the work's done. We're like tax professionals. We do all our work in a small period of time, and then for the rest of the year, we do dick all. All right, let's see. Let me check any questions or comments or whatever. Milad says, hi, the Fed is going to speak. We got ugly numbers. Milad, technical analysis, we're not concerned. We're not concerned. It may have some bearing, but everything should be in the charts, okay? And so now let's actually, speaking of the Fed, let's look at the DXY, the cursed DXY. Ooh, look at that. All right. So let me start off by saying, my read on the DXY was right and wrong. It was right in that I counted 5 waves in this move right here. Okay, and that seemed okay. 5 moves here, and that was the end of the 5th wave, right? And in the larger scheme of things, this 14-year resistance right here is still in play, okay? So on the higher time frames, we're okay, and that's not out of the ordinary. High time frames are a little more forgiving and easier to read. But this is a daily show, so I take risks and I zoom in. You'll see me, talking about analysis done on the 15-minute time frame, and that's okay. I don't mind making mistakes. All right? So what was the mistake? Let's erase this. Let's go into the smaller time frames, because I've been showing you small time frame price action on this channel for the DXY, okay? And actually, let's turn log on, okay? So what I've been showing you is this range, and I was saying this range is going to break down. This to me is the end of this move, okay? And for me, this was it. So I was counting a consolidation reversal here. But what this actually was likely a wave 4, okay? So this was the ending diagonal right here of a wave 3, okay? And if you zoom out, you can get more context. All right, so let's zoom out on the 4-hourly time frame and look. And what we see is, all right, that's our, just for your bearings, that's the end of the impulse right there. So you get your 3-wave move, your A wave, okay? This should be your B wave right here, okay? This is your big A, big B, right? So that's your first degree of consolidation reversal. I talk about this a lot on this channel. For any time frame, any reversal, you need something like this. That's what's going on right here. If we're getting a reversal on any time frame, you should be able to read consolidation reversal patterns. Price just doesn't go up and then down, right? It has to consolidate, reverse. It has to do its sort of chop, okay? And now you get, and that's all based off of Ralph Nelson Elliott's work, okay, A/B basing and stuff like that. So now you need a second degree, okay? So this was the second degree A wave, and I was going in and looking at this, and I'm like, ooh, that's a second degree B wave. It's done right here, okay? And that was false. That was false, okay? Now, it wasn't completely wrong. Why wasn't it completely wrong, okay? It wasn't completely wrong because we know any A wave can retrace, it can have a B wave retracement up to the 0.618, the 1.618, the phi ratio of that A wave, okay? So this would be the top, this would be the absolute limit, all right? So this is your small a, okay, in 3 waves down. Your small b is also a 3-wave move, okay? But I thought that 3-wave move was 1, 2, 3. But it turned out to be 1, 2, 3, okay? That's a great example of a misread. It could be fatal if I didn't have good risk management, okay? So if I had too small of margins on my positions, if I was overly confident, if I didn't take into account the probability of being wrong, I would have been stopped out of many positions, okay? And I told you, even yesterday, as early as yesterday, I said, guys, I don't think that this range right here is going to break up. It's not breaking up, okay? And I was wrong. But what's more important than being right or wrong about this is being right about the larger move and the larger context of things, okay? On the small time frames, being wrong doesn't have to be deadly. But on the large time frame, yeah, that's pretty deadly. Do you see what I mean? So there's being wrong and there's being wrong. And it's fine to be wrong. Obviously, that's the part of the business, yeah? And that's why you practice good risk management. So, I've been stopped out before. Thankfully, didn't get stopped out now. But just word to the wise. Hopefully, my mistake helps as a teaching tool, yeah? Even when you're wrong, you can be right. So, even when you're wrong, if you practice good risk management, you should still be okay. So, first, rely on the larger time frames to formulate a good thesis, and then you zoom in. And even if you zoom in and you're wrong about your read, that's okay, as long as your larger thesis is correct, and it's easier to formulate a correct larger thesis, if you're practiced and you know your theory. So again, this small b is a 3-wave move like this, which is what I'm reading now. And then you get your pivot right here and the dump of a lifetime, okay? It's going to be the dump of a lifetime. Guys, let me know what you think about that. Like, that's my breakdown for what the DXY is doing. This is why I'm seeing this come down. okay, it's come to its conclusion, okay, because here I read 2 degrees of AB basing, okay, and again, these AB bases, reading them is a process, right? You saw me change the count multiple times. It'd be great if I already knew exactly what these corrective waves would look like before they formed, but in my experience, like, that's not how it works. Maybe someone out there is so good at reading AB bases and corrective waves, they don't make mistakes, but I do. So I'm fine even making mistakes, but I just track it and fix it, and track it and fix it gradually. But I still have my bearings. I still kind of know what the market is doing, more or less. Like, a lot of people are saying that the DXY is so bullish and it's soaring and blah, blah, blah. To me, there's nothing bullish about forming bearish divergences left and right, okay? I mean, on so many different time frames. Let me just show you on the weekly time frame. Sorry, wrong tool. Let me first clean all of this up. And here we go. Okay, so this is the 4-hourly time frame. Actually, let's go first. Let's start on the monthly time frame. There's nothing bullish about something that's topped out on the monthly time frame. It's overbought on the monthly time frame. You go to the weekly time frame and you see, well, actually you can even see bearish divergence on the monthly time frame. You just have to look closely, okay? So if you look here, you can see it's not confirmed. Yeah, you have it's not confirmed. It's not confirmed. Okay, I think it's easier to see on the weekly time frame. On the weekly time frame, you can see this very clearly. You can see here, you have you have a higher high right from here. You have a higher high, obviously, between this the end of the 5th wave and the top of the B wave, and you usually see this. Okay, nothing that happened in the DXY is out of the ordinary. Look at Bitcoin peaking in its history. It does stuff like this. Like, you think it's going up forever and it's never coming down, and I've tried to short it and gotten stopped out, and I've done a lot of this. It's hard to form positions at the tops or the bottoms. They always do this. It's like how often is it going to test the support? How often is it going to test resistance and peek through resistance, right? This is common. If you trade and you follow tops and bottoms, right? Doesn't mean you have to trade them, but if you follow them and you track them, you'll see this often, okay? So here's your confirmed bearish divergence on the weekly time frame. This is strong bearish divergence on the weekly time frame. You see that? Okay, so that's the weekly time frame. If you go on the daily, you see it's confirmed as well. Okay, so on the daily time frame, and as I always say, if you want to do these divergences, the best thing to do is just use stochastic RSI. You don't get points for adding difficulty or complexity, right? Just keep it simple. Stochastic RSI is by far easier and more clear than using regular RSI for reading divergences, okay? So basically, here's your confirmed bearish divergence on the daily time frame. Confirmation given right there on the 19th, okay? So even after that confirmation, you had this move up, but this move up is bearish. It's not something that you should trust, okay? And besides all of this, remember, this is a 14-year resistance, right? I showed you this is a 14-year resistance. You came up at the top of the 5th wave and were rejected by this for your big A, okay? And you can wick up and out of things. It doesn't mean anything, okay? Just because you break it by wicking out of it doesn't necessarily mean it's bullish. What's bullish is if you breached it, you came back and you consolidated and you formed this previous resistance as support, which is not necessarily happening. What you should see, given all this bearish divergence, is a big move under, a retest, and then a big move. Do you see what I mean? Because you always, every time you break major support, you retest it. So you got to break it, retest it, and then go down. Okay? Same thing on the way up. If you have resistance, you finally break it, retest, and then you go up. Okay? So that's what I can expect to see. And, you know, you have strong bearish divergence on the weekly, on the daily, and, you know, based off of our count, this is the move that's happening, right? Yeah, it didn't happen in a day or 2 days or 3 days or even 10 days. And it took some time from the end of this fifth wave, right? We tracked it. It's been 69 days, right? This is exactly what you see in tops and bottoms, right? You spend all this time consolidating at the top, all this time consolidating at the bottom, right? And Wyckoff people, or Wyckoff theory talks about this very well. You form consolidation, what does he call it? Accumulation or distribution, okay? So this would be an effort or an example of a distribution pattern, right? And actually, if you just look at this from a pattern analysis standpoint, you're essentially making a rising wedge, okay? And what do we know about rising wedges? They break down to where they formed, okay? You could look, if you go on the weekly time frame, I think it's even easier to see. Like, this is essentially all one massive rising wedge that's likely to break down to where it formed, right here. This blue rectangle is where I think we find support in the DXY before consolidating and making the next run up, okay? So that's around 80, 88, 87, 88, okay? So that's what I have on the DXY. I know some people get frustrated because it doesn't happen. Like, we talk about it and we say it's bearish, and then 69 days later it's still up in that region. But if it was bullish, do you think it would spend 69 days in a particular region? It could, you know, wave 4 and stuff like that. Like, those, you know, wave 4 typically consolidates for a while and then continues the impulse. So it's possible. But in this case, just given everything that we're reading, this is bearish. There's nothing bullish about this, okay? So, you know, people who don't know how to read charts, they're saying Bitcoin's going to zero because look at the DXY, it's forming 20-year highs and stuff like that. That's why you don't pay attention to price as much as price action. The fact that it's forming a 20-year high is completely insignificant. It does nothing, right? You do not want to long this. You do not want to long this because it's bearish in every sense of the word, right? Yes, it broke up and out of our channel, but again, if you read it, and you just look at all the clues, okay? You don't have to rely on one Elliott wave count or an AB base count, whatever. Just everything combined, the 14-year resistance, the 5 waves up, and the, you know, the AB basing and the bearish divergence. It tells you that you do not want to long it, and it's a matter of time before it breaks down, and breaks down in a spectacular way, in spectacular fashion. Okay, the other really telltale, easy to read sign about the bearishness of the DXY, which we all know is inversely correlated to Bitcoin and stocks and equities, is the fact that as it was, okay, so I want to show you this actually before clicking out of the DXY. Let's see. I wanted to show you something. One sec. Hold up, let me just check. I wanted to show you one more thing on the DXY. Ooh, look at this. Look at Bitcoin. Guys, look at this. This is on the hour. Look at this candle right here. This is what we were saying in the beginning of the stream. This is so freaking bullish. Look at the wick. Look at the body and the wick. That is what we call a hammer candle. That is the most bullish thing, okay? This is it. This is it. And yes, you have some altcoins that have already started running, okay? They've already started running, right? Synthetics is popping up. Binance coins popping up, Litecoins popping up, right? Harmony One's popping up. Bitcoin is going to follow suit. Dodo is popping up, all right? Okay, so the other thing I wanted to show you guys is this. So despite what the DXY has been doing, we all know it's been going crazy to the upside, right? If you go on the daily time frame, this is what it looks like. The past 2 days especially, let's just focus on the past 2 days. Like, look at those green candles, like huge green candles to the upside. If you measure it, the past 2 days, it's 2%, which is, in crypto terms, it doesn't seem like that much, but in traditional markets, yeah, that's a lot, okay? So 2% to the upside, okay? Now, in that same time, the past 2 days, right? In Bitcoin, what have you done for the past 2 days? You've done nothing. You've essentially done nothing. These are the past 2 days in Bitcoin. You've gone up and down. Do you see what I mean? That is really, 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 really bullish. And that tells you what's going on. You're forming a base for continuation to the upside. If the DXY has gone crazy for the past 2 days, put in 2% to the upside, 2% in a traditional market, not a crypto, market, which is more volatile, right? And the Bitcoin, which is inversely correlated, pretty much is stagnant. You can see that here. It's pretty much been ranging for the past 2 days. That tells you everything that you need to know. That the inverse correlation of the DXY to Bitcoin still exists, but it doesn't have as much of an effect given that Bitcoin is preparing for a move to the upside. Because if it wasn't, we would have broken this and lost this range in these past 2 days. Guaranteed. Yeah. So that to me is very bullish. So yeah, that is pretty much it. Guys, what do you think? It looks like the charts are showing us what we've been seeing. I'm looking at my positions right now, and I've got quite a few positions open, okay? Because this is the bottom of the market, I basically got some positions on leverage, and they're doing really well right now, okay? So yeah, I've been playing defense, just making sure that my positions stay open, and that, they're not threatened with the volatility, because you always know before the big move, either up or down, you're going to get some volatility, right? Because the volatility basically means whatever consolidation, whatever corrective move you put in is going to be completing, or it's going to complete. And so you're going to likely go up, down, up, or down, up, down, It's just, that's how it is. That's why you get high volatility before the big moves. And we got high volatility, and I think this is the big move. Okay? I think this is the big move. Guys, if you're getting value, please like, share, and subscribe. I would greatly appreciate it. Yeah, I mean, stuff's green right now. It doesn't really matter what the Fed says and what those numbers are. Just read the charts. Everything's in the charts, guys. Show me the charts. I'll tell you the news. Doesn't necessarily mean that there's no effect. But even if there is an effect, trying to time it based off of, some number or what somebody says or when they say it is inane. Look at the charts. The DXY's been forming bearish divergences forever, okay? And it's been a matter of time before it rejected from this 14-year resistance. It rejected in this AB base distribution pattern to start its move to the downside, okay? So, whatever the hike or the basis points or something like people spend a lot of time and energy trying to figure all of this stuff out. You'd probably be better served learning how to read a chart. Just, it doesn't matter if it's Wyckoff, if it's, Elliott wave, if it's just pattern analysis, get proficient. Or if it's reading momentum indicators and price action, right, and candlesticks, just get proficient at actually doing technical analysis, because that stuff isn't technical analysis. It's not technical analysis. Technical analysis is about the chart, and everything should be comprised in the chart, barring any fundamentally drastic changes to the underlying asset. Meaning, Luna, something depegs, right? Some DeFi protocol is depegged. Then obviously it's going to be reflected in the chart and it's just going to go to zero, right? I'm not talking about that. I'm just saying most of all of this shit is in the chart, and it's been in the chart, right? And I've been aping into long positions and building them and adding to my margin, not because I care, not because I know where the Fed is, gonna put the basis points or whatever the fuck. I don't even know. I don't spend any time doing that or reading that. And I've got a lot on the line, I've got multiple 5-figure leveraged trades. And if I'm wrong, I lose a lot of money. I spend all my time looking at the charts, looking at the DXY, the market maker, looking at, the actual charts of the assets that I'm invested in. I spend no time, thinking about, oh, this is the big day, that's the big day. Show me the charts, I'll tell you the news, right? And it's all a way to do, what we do is speculate. It's speculative, right? But there's just such low probability. Trying to figure out and decipher what number of points a raise is being done and when it's going to affect them, all that bullshit, guys. Just learn, figure out how to read the charts. Figure out. I'm not even that amazing at reading charts, and it served me really, really well. And you guys see me make mistakes all the time, and I'm still making money hand over fist. The fact that I've had positions open for months, it's not because I'm like watching C-SPAN or wherever the fuck they play that news for, the financial markets. I don't care about any of that stuff, right? Like I built my positions based off of solid theses, solid information that the dollar was overbought, information that Bitcoin was oversold, and trying to read to the best of my ability and time the market to the best of my ability. Obviously, I use a combination of timing the market and time in the market. So I play with my margins and give myself enough of a cushion to stay in the game as long as possible to give myself a better chance of being right. But at the same time, you see me every day looking at the market and trying to figure out when it's likely to turn. Yeah, because it helps. So Milad, Milad says, what do you think we go back to 17.5 again? Milad, look at the chart. Look at the chart. It's going up. It's going up. And it's not just that it's going up, it's how it's going up. Okay? So Milad says, are we going back to 17.5? Like, what do you think? Okay? I just showed you a chart. This is Bitcoin. Okay, you can use pretty much any asset. This is 100 days of price action, Milad. Okay, you're at support. Keep it simple. This is what you really want to do. I think you want to live and breathe this to the point where you don't even think about it anymore. It's just second nature. Like, this is charting 101. This is support. You can call it liquidity. You can call it a demand zone. It doesn't matter. It's support. This is resistance. You're at the bottom, and you just bounced off of this demand zone, this liquidity zone. You have a big candlestick, a hammer candle here, designating strong buying pressure, okay? What do you think comes next? Okay, I'm going to ask you, what do you think comes next? We just stop with this buying pressure, this doesn't mean anything, and we reverse. If anything, if you were bearish, you would say, okay, I think that we're going to reject off of the median of the channel, because we all know When you're trading channels, the top is resistance, the bottom is support, the middle is resistance. If you're below it, it's support if you're above it. Do you see what I mean? So Milad, you answer the question. Where do you think we go from here? That's Bitcoin. Look throughout the cryptocurrency markets for sort of hints. Actually, you know what? We haven't done this. Look at the SPX. What do you think happens in the SPX? Okay. Also, very bullish. The DXY's been acting crazy, going up like crazy for the past 2 days. What has the SPX been doing for the past 2 days? You would think that the DXY was ranging. The DXY has been going up like crazy for the past 2 days. The SPX has been ranging. That's extremely bullish. Guys, if you understand what that means, that you have to understand, despite the underlying asset, which is the dollar, going up, these assets, the SPX Bitcoin, have been ranging. Basically, that means all selling pressure is exhausted. That's what it's telling you. Like, this is what I'm saying. Learn to read the charts. You can make mistakes on the small time frames, even sometimes on the larger time frames, but learn to read the charts. It's a lot more I want to say gratifying, but that's not the word. It's a lot more useful and yeah, you know what I mean. It gives you a lot more than trying to, mess your mind up with all this news. It really doesn't matter, right? So the SPX, I mean, it's bullish as hell. And we were talking about how it's now or never for the SPX. We saw that yesterday, yeah? And that's exactly it. You don't lose this level. You don't want to lose this level for many reasons. And technically, you can't if you're going to continue up. Because if this is your A wave, this is your B wave, you only have so far that you can retrace, right? This is, again, this would be small a, this would be small b, right? You have to maintain this as a counter trend, not a new wave down or not a new impulse down, okay? So that's the SPX. But going back into crypto, to answer your question, Milad, look at other assets. Like, they give you clues, right? If you want to look at just crypto, right, this market, look at what's happening in Cardano. Look at the nature of the candles here, right? We know what a bullish candle is. You know what a bearish candle is, right? That's, again, candlestick charting 101. The body's here. The wick is top. That's a bearish candle. That means that's their selling pressure, right? That's what that means. Strong wick to the upside, okay? And when it's turned around, when the wick is strong to the bottom, that means it's a lot of buying pressure, okay? And what do you see here at the base of a channel that you've been in for 130 days? What do you see? So the history is telling you something, okay? And what do you see here? So where do you think this is going to go, right? That's the question you should ask yourself. Nobody has the answer. You could just ask good questions, right? So even if you ask me a million times, I'll tell you, what do you think? Because I think it's going to go up for X, Y, and Z reason. And for you to make the best decisions, I think, you should ask yourself the question and have enough tools to be able to answer those to a high degree of probability. But yeah, looking at Dodo, looking at DOT, looking at Ethereum, reserve rights, right? You can see the same thing. You're at the bottom of a channel and you have strong buying pressure to the bottom, in the demand zone or at support. This is likely going to result to a move to the upside. I mean, look at Cadena. Look at that. Look at that. See, even without, this is a good point I'm going to make right here. So let's say, so this is Cadena, right? Every asset has some sort of personality. So I put this blue box or this blue range, right, to designate where, we've been ranging for the past 130 days. In Cadena, you had always wicked below this. You wicked below this. You come here for your final spring, as the Wyckoff people would call it. You have your A wave and your B wave. This is a counter wave, right? You do the same thing in the same region. This is really bullish, okay? And that, it's not like out of the order, outside of the ordinary. This is what you should expect given the history. Do you see what I mean? Historically, you've wicked below, so expect to wick below. In this demand region, there's liquidity. This is the liquidity you've been taking in the bear market. For 130 days, you've been grabbing once, twice, 3 times, boom. Okay, at the very least, you're targeting the middle or the top of this range, right? Remember, middle is resistance, top is resistance. BNB, you can see the same thing. Litecoin, you can see the same thing. Expect to move up. Look at that candle, right? You want to use all your skills, right? I specialize in Elliott wave theory, but you see me every day on this channel. I'll use candlestick analysis. I'll use pattern analysis. I'll use everything that I've ever learned to try and make money. Why wouldn't I? I'll use indicators. I'll use anything I possibly can. But obviously, I always resort to my bread and butter. Yeah, and again, so Milad, use other assets to get an idea for what's happening. So in pattern analysis that this pattern, this descending wedge is very bullish, right? And it's a descending wedge. It's legitimate because you've tested once, twice, 3 times, once, twice. Okay, so it's a legitimate support and resistance. Support on the bottom, resistance on the top. Okay, you've tested them quite a number of times. What do you think happens when you break, right? And what do you think is going on right now? So see, these are the questions you want to ask yourself. I think, we're getting the move up here. So yeah, that's pretty much it for me. Guys, gotta go pick up my son. It's been real. Thank you for joining as always. I hope you're doing well. I hope you are well positioned in this market to take advantage of the bottom of our bear market. I cannot look at Rose Coin today, Milad. Actually, let's do it. I'm going to look at it really quickly. Milad wants to look at Rose Coin. Let's look at it really quickly. Okay, so this is the daily chart. What do you see here? It's likely that you're holding support. So what you want to do is you want to grab this through wave move. Let's see. Yeah, okay. So this is a little tricky. I don't know if you know why I initially put the top of my retracement, fib retracement on here, but then I put it up here. And the reason is, in my experience, I know that this is a 3-wave move right here, okay? And I know that this is the end, and this B wave, so this is the A wave. This B wave came above this A wave, which is something that you see all the time, okay? But this is one contiguous move, and this 1, 2, 3 is your initial break of structure, or your small a, if you want to call it that. That's a contiguous move. So I want to measure the top, the bottom, and the top of this move to see what this move means to this move. That's why I pulled my fib retracement as I did. I know I don't always explain this, and I apologize, but I don't even think about it because I look at so many charts and I do this so often. But that's why I pulled it like this. And pulling it like that, I basically see that this retracement has come down once again in a bullish descending wedge that is respecting the 0618. And as I said before, any counter wave that respects the 0618, expect the continuation to be in the same direction as your initial break of structure. Okay, so Rose Coin is also looking good for continuation on the larger time frames. Okay, and you're respecting this 0618. All right, so that's pretty much my read on that. All right, so yeah, gotta go pick my son up, guys. It's been real. Take care, and thanks for watching. I'll see you tomorrow.